The next one on the list is Kimball International, and it's news to me what the heck they do. It consists of 3 brands: Kimball National Hospital. It's a successor to world's largest piano and organ manufacturer.
Furniture manufacturing business.
Do you want to look at this?
Sure.
Their stock price is
all right,
dramatically down from where it used to be.
$440 million.
This is Kimball International.
Checkmark, PE of 12.65. Profit margin very low here, 3.64%. It seems to be a lot higher in the recent 12 months, but the last quarter was only 3.64 and a 3% dividend. So the 3% dividend is about $12 million a year. So right now we have a check and an X and a $12 million dividend. Remember, dividend's going to come out of free cash flow, so we want to make sure that when we calculate free cash flow, it's significantly higher than $12 million a year, so it's not a dividend trap.
Pillar number 3 is revenue growth over the past 5 years, Paul. This is for Kimball International Piano and Furniture Company.
635, 730, check mark there. Not big growth, but consistent. 635, 693, 704, 760. Oh, it's a little drop this year. So I want to see why. Oh, because this was, look at this. Their year ended in June of 2020. This was the peak of the pandemic. So I'm actually surprised it was only this drop right here.
Are we up to profit growth? Pillar
yep,
number 4?
Profit growth, 21 million to 41 million. So far, I like this, guys. Even though their PE is their profit margin is low, I like this. Number of shares outstanding.
Oh yeah, pillar number 5 is number of shares outstanding, Paul.
37.5 million, 36.9. Check mark there as well.
Profit is up, shares are down.
So we like this so far. Balance sheet.
Current assets greater than current liabilities is pillar number 6, Paul.
225 million in current assets, 98 million in current liabilities. Wow. Guess what, guys? Total liabilities of 130. So they had 230 in current assets. Subtract out, what was it? 130 in liabilities. That's $100 million. So they were 430. The company was worth 430 million. Whenever your current assets are greater than your total liabilities, you subtract this number out from the market cap. So you're essentially paying $330 million to this company. Wow. This is a big, big check mark. You know how much I love it. We usually look only at current liabilities, but I always scan below and see the total liabilities. They have more cash on hand, essentially, than total liabilities. We love this. And the company's only selling for 430 million, which is essentially like you're buying it. You're buying a company for 430 million, and then their bank account has $100 million in it already. So you're taking over the bank account. So you're essentially only paying $330 million for the company.
I'm now interested to see the free cash flow growth, Paul. Pillar number 7.
Free cash flow. Okay, well, it's dropped a lot. So it went from 33 million down to 8 million.
Oh boy.
So that's an X, but let's go take the average. So 52, 24, 45, 44, sorry. So there was a big drop this year, but this is expected because it was June.
32. What do you think?
Yeah, this is a buy. I mean, I'm not going to say it's a buy, but this is a good one. This is one you have to go look into because look at it. You're buying it for $100 million less. I mean, it's essentially.
Wait. Before you jump there, show the final thing. So the free cash flow
was 32.
What multiple? Now this is.
Remember, the company no longer is a $400 million company. It's 330.
Mm-hmm.
And you're getting $32 million a year in free cash flow, including their really crappy year this year, which is the pandemic. So you're basically buying it for 10 times free cash flow. If you take out the crappy year, you're buying it for like 8 or 9 times free cash flow. Let's see how the last 12 months is done in terms of free cash flow. Look at the last 12 months, including the crappy quarter, the crappy time. They've still had $28 million in free cash flow with a crappy pandemic in the middle of it. This is who gave this to us?
This
Lurch.
is Lurch, our patron.
Who's Lurch?
Gave us. Don maybe give some insight on that.
He's new? Oh, great job, Lurch. We like it.
Great find.
So I like this one more than I like Capri Holdings, I think.